The Abilene real estate market had a strong start, but with interest rates on the rise, what can we expect from the rest of 2022? Hi, I'm Tanya Harbin with the Tanya Harbin Real Estate Team, brokered by Real, here with your May market update. We continue to see a strong real estate market in Abilene throughout the first quarter, with more sales, higher prices, and a slight increase in inventory. In the first quarter, we had 575 closed sales with an average price range of $247,000. When comparing that to quarter one of 2021, that is an increase of around 50 closed sales and a $34,000 increase in the average price. That is a huge increase. But one cloud hangs over the market: the rising mortgage rates. Yes, mortgage rates are on the rise. At the start of this year, rates were around 3.1%, and they have steadily climbed. So nationally, we are now seeing an average of about 5.1% for a 30-year fixed rate mortgage. The biggest question that we are being asked is, what happens next? So are interest rates going to keep increasing, or will they level off? If only we had a ball that would tell us. We have been asking our trusted mortgage experts around town, and there are varying opinions on what rates are going to do next. Some experts are expecting rates to level off around 5%, where they are at now, but some think that rates may increase to 6, 7, or maybe even 8%. The truth of the matter is that nobody really knows for sure what will happen, but we are training our agents to be prepared for either scenario. Another question that people are asking is, what impact will the rising rates have on home prices? A lot of people think that as rates go up, home prices go down. But if you look at data going back to 1990, we can see that rising rates have not had a negative impact on home prices. We actually saw that even in the years where mortgage rates were increasing, the home prices increased also. So what will happen with home sales with the rising interest rates? Rising rates can and likely will reduce buyer activity, and some buyers could be priced out of the market altogether. But historically, that has not accounted for a large decrease in home sales. So what does that mean? The housing market today is extremely different than what we've seen before. And so far, the rising rates have had little impact on home sales and home prices. But why is that? Simply put, supply and demand. If you've watched our other market updates, you'll know that we have been dealing with record low inventory and an influx of buyers. So home prices are projected to continue rising because there's just not enough homes for sale. So when you see news stories about a decrease in home sales, just know that is not because of the rising rates. It's just because buyers can't find homes since there aren't enough available, and it's hard to sell what does not exist. Don't let that discourage you from wanting to buy a house. If the prices that you see are now at the edge of your price range, I would recommend buying now, and then you can always refinance when rates decrease. Thanks for being with us today. We will see you next week.